Well, what started out as a niche class a decade ago has grown into a sizable asset class that is starting to attract institutional capital. Hedge funds have come a long way in South Africa and will probably continue to grow at a rapid rate. Let's take a look. Firstly, I suppose, gentlemen, welcome to the show this evening, as always. And Murray, let's start off with you. If you could just give us a background as to the evolution of the hedge fund industry here in South Africa.
Yeah, the hedge fund industry started, as you mentioned, probably close to 15 years ago, very small. It's still a very small industry in South Africa. There's a total of 30 billion of assets in South Africa. Now, if you can put that in perspective relative to the unit trust industry, which has about $1 trillion. So it is very small. And you compare that to globally, where there are about 9,000 hedge funds, and it's an industry of around $2 trillion. That has been around for probably 50 years or so. So we are a very small industry at this stage. We have seen some decent growth in the last 5 years, but our views are that you will see this growing quite significantly over the next 5 years.
Is this a case of the market just becoming more sophisticated here?
Yeah, I think, Samantha, firstly, yes, certainly it is. 15 years ago, you must remember that many of the hedge fund operators in South Africa were breakaways from long-only teams. That means traditional fund management teams, setting themselves up as either long-short managers or just general hedge fund operators. And at that stage, I suppose the institutional market, firstly, they weren't allowed to invest in it, and they had to go after private client money. Most of the private clients that gave a lot of those individuals and many of those companies money obviously did fairly well out of a fairly sustainable track record over time. And then in the midst of all of that, we obviously had a whole bunch of stuff happening globally where some hedge funds blew up, names got tainted and so on, and hence, are all hedge funds created equal in this industry? Are all hedge funds actually all exactly the same? Because once you mention hedge funds in institutional space, you see a lot of people, kind of the eyes grow big and people start saying, is this really something that I should be investing in? Just to show you how the industry has actually grown over time, just have a look at that table that you see on your screen at the moment. That's the assets under management, and this is all this comes courtesy of Novare. Their hedge fund survey. And if you just have a look at how that industry has grown. In June 2002, a really, really small industry, and that has really grown to what Murray said just now, to a 30 billion rand industry that you're seeing at the moment. The strategies that are employed in that space, you can see that the majority continues to be kind of in the long-short space. A little bit less in the equity market neutral and the fixed interest hedge space, and then very, very little in structured finance and maybe volatility arbitrage and any of these other strategies. Murray, long-short continues to be kind of the thing in South Africa. Is that due to the market structure in South Africa?
Yeah, Kobe, I agree very much on that. The structure, I guess, most people, as you mentioned, came out of the long-only space, and so it's been typical to relative value trades going long and short. Market neutral grew quite nicely as well, but in the last 18 months or so, there's probably been a shift of funds away from market neutral, more into the long-short space. And then the other category is fixed income, which there's a lot of money, or relatively more money going into that space.
Roland, what's your perception of the type of tools that hedge funds are now employing here in South Africa, and whether they are basically hedging against risk or more risky than the overall kind of mutual fund that you have out there?
Well, I think when the industry started, market conditions were very different to today. So I think a lot of hedge funds have had to adapt their trading strategy or their investment philosophy to some extent. For example, 10 years ago, we were probably entrenched in quite a strong bull market. So when you have a net long exposure, you tend to generate quite nice returns. But I think the focus of hedge funds has shifted, and maybe I can ask Murray this, has shifted largely from a return focus to much more of a risk focus more recently. And I think when markets are highly correlated, it's often harder to, on a long-short basis, necessarily generate those kind of returns that you have when stocks are less correlated and you can pick the winners from the losers kind of thing. But what kind of emphasis do you place in terms of lowering or let's call it increasing the return per unit of risk? Because that's what hedge funds really do, right? Is they're trying to mitigate risk. But at some point you can't take no risk because then you're going to not get any return. Yeah. So how do you balance that?
Yeah, that's absolutely right as regards hedge fund. The big thing is to try and protect on the downside and to try and get your return per unit of risk as high as possible. And the hedge funds, globally have been pretty good over time. they've done really well relative to long only, particularly in the last 10 years in the States. The last year or two they've struggled a bit, but prior to that their returns and track records have been very good. But I guess clients, you want to capture some of the upside, but the most important thing is when markets tank, you want to protect your capital or lose very little of your capital.
And how would you do that? Would you do that in terms of the stock positions that you move from a net long to a net short, or you're just reducing your net long exposure, or would you take derivative protection on your portfolio or on an index?
What is the trend here in South Africa specifically?
Well, as Kobe was mentioning earlier, there are a lot more strategies implemented internationally. South Africa, a lot fewer strategies. Derivatives are used quite often. And then by just going short, putting shorts on. One of the big things about hedge funds is you're there to try and protect the loss. So you can put derivative strategies in place. You can also short underlying stocks against the longs. And by doing that, you limit your downside when things get quite tough out there.
You see, I mean, I think the thing that's kind of important here for me is, if you listen to how Murray speaks about the industry and what people do, we're talking about complex strategies over here. And hence, any client that engages with a hedge fund manager needs to understand what they do, how they do it, and what potentially the results could be from their process and their philosophy, and how those potentially interact. And I'd like to say that if in the hedge fund space, for me personally, it makes there should be even more emphasis on this than it is on the long-only space. And hence, you see a personal relationship there, and that's something that I think is great for portfolio managers in the hedge fund space. A personal relationship with a client where they're actually trying to build wealth for the client long term by taking alternative strategies and trying to employ those.
But these, I mean, hedge funds are sometimes referred to as mutual funds for the super rich, and that there are barriers to entry. Is that applicable?
If we look at the structure of the hedge fund industry, they've been traditionally unregulated. So managers were able to do whatever they liked to. The disclosures have been pretty bad, particularly internationally. The liquidity has been quite an issue. That has changed a bit, but it is still very much regulated. There's very little regulation. So, and marketing or getting people in, it must be, as you mentioned, for the high net worth individuals. In South Africa, there's a lot more transparency. You have the managers all have to be approved by the FSB, but the product is still not regulated. So it still is for the high net worth individuals that have a lot of money and put a certain portion of their funds into hedge funds.
Yeah, the problem I think is if you've got this bias in the industry. You know, this must be close to a decade ago now when long-term capital management blew up globally and literally took a wake of liquidity out of the market, and literally the investment community globally sat back and said, you know, is this really what we should be doing with capital? So hence, today, I think the hedge fund industry in South Africa has to overcome exactly the same biases as what they've had to overcome globally. And hence, I think it's a hard sell. I think hedge fund managers having to go out and have to go and fight for capital and have to show that they can predominantly sit and actually provide value and provide returns long-term for clients and partner with clients long-term. And I mean, I've got no doubt in my mind that the majority of individuals that are available in South Africa, you know, could certainly do that. Just look at your screen again, and you'll see you'll just see the number of hedge fund managers that are available in South Africa. We built as high as 70 different fund management organizations in 2009, and that's now tapered down to about 60, of which, Murray, I suppose most of those are long short. And the long short managers obviously come from a long only background, hence they understand how to manage money. And hence, if you're going to be looking at people in the long short space, you should be happy to give them a long only mandate as well.
Yes, I'd agree with that. There are quite a lot of the managers, hedge fund managers, that are running long only, and then they're running hedge as well. So they do a combination. We just do the hedge fund space at this stage, but definitely should be quite comfortable on the long only side. But I think by being on the hedge side, you're able to do a lot more than just being long. And because the South African industry is quite small, there are quite a few opportunities that do emerge by being able to short or to use a little bit of leverage that can actually enhance your yields quite a lot.
Roland, I mean, what type of individual are hedge funds most suited towards?
Well, I guess anybody who's trying to look for some kind of absolute return or some kind of return where the downside is managed actively, because in a long-only space, you're not really managing the downside. So it's an asymmetric return. I don't like the word absolute return, but they try and generate some kind of option payoff profile where you're getting less downside, but you're still participating to some extent, not necessarily fully with the upside, because they're not 100% long, they're net long. But Murray, how would you currently position or how in this risk-on, risk-off kind of environment? Are there certain things that hedge funds can do to manage that? Because market conditions seem to be different than they were prior to the subprime crisis. Are there certain trading strategies or ideas that people use?
Yeah, there are. Particularly, I guess if we look at the space at the moment with commodities, what is going on there, you take something like a typical type of trade that someone could do. You look at oil right now, it's sitting up at Brent's at $115. You look at Sasol, which is trading, it looks extremely cheap on about a 6.8 times multiple. The Warriors oil's going to come falls back down. A hedge fund, what it can do is actually put on the actual underlying stock and then short oil against it.
The actual oil,
the actual dollar Brent oil price. If it stays where it is, Sasol's going to go up. If it comes down and falls, Sasol will go down, but you're at least hedging part of that strategy. So that's a typical trade at the moment, with commodities being a space that is coming under a lot of pressure at the moment.
Just to wrap this up, just get final comments from you. Reg 28, of course, pension funds now can invest in hedge funds, but overall, the kind of trends we're going to see going forward, are we going to see this industry taking off?
The industry has been very static the last 5 years, and returns have been very good. And it has been held back by Reg 28. That changes that happened in July last year, and up to 10% of pension fund money can now go into hedge funds. That is a big driver, we think, over the next 5 years. It takes time for pension funds, trustees to get their minds around that. But we think there will be significant growth. Our view is that probably over the next 3 years, that 30 billion will grow somewhere close to 100 billion in the industry. So that's the one side. The other side is they're trying to regulate the product, like unit trusts. And that will be coming through within the next year. They're trying for end of this year. We think it'll take longer. And once that happens, a regulated product for individuals, then the man in the street will be able to get into that product as well. So that will be another driver. Yep. So the tailwinds are pretty good.
Closing comment from you, Kobie.
I think hedge funds have got a great future in South Africa, and I think globally as well. It's obviously about the regulation. It's making sure that regulation takes into consideration the space that hedge funds can play in and opens up in order to give them leeway so that they can become better represented on board of trustees. Board of trustees can choose these kind of funds, and as Murray just said, the man in the street.
Well, we certainly are moving in that direction, so positive developments. We're going to have to say goodbye to Murray Winkler from Laurium Capital. Thanks so much for joining us today. Of course, great to have your insight into the industry that is set to grow to 100 billion from around 30 billion.